Everybody wants to reduce their income as much as possible. But if you want to get lending for a loan for the business or a line of credit, if you want to buy a house, if you want to buy a car, you want to buy an investment property, and you've been really skimming your income to show that you don't make a lot of money, you're not always doing yourself a favor if you're hurting yourself from getting some of those opportunities. Welcome to the Know Your Worth show, where we teach you how to think about your money differently so that you can achieve your sexy money goals. I'm Sydney, your money maven and owner of Know Your Worth.
And I'm Kristen, Sid's dime piece bestie, team member, and busy mama of twins, here to make sure that those of us without a financial degree can still level up with each episode. Let's get started on reaching your next goal.
Hello, welcome to the Know Your Worth podcast. I'm one of your hosts, Sydney Conway.
And I'm your other host, Kristen Fideli. We're so excited to be back with you, and it's just the two of us this week.
Yeah, it's been a while since it's been just the two of us.
Yeah, this is why we brought other people on, because it gets a little too unhinged.
Give you a little bit of reprieve from this.
Yes, you're welcome.
Yeah, but we're back. And today we are going to be talking about buying a home as a self-employed individual or a 1099 contractor, someone that doesn't receive an income from a standard W-2 or doesn't receive all of their income from a W-2.
Okay. And why is this relevant to us right now, Sid? Tell the listeners.
I just did it. And from the first time I bought my first house, that situation, I was by myself buying the house. I had pretty solid W-2 income. I think at the time, sort of set the scene for the first house. I was 20. I think it was 24 when it finally went through, but 23, like when I was looking pre-approved, I was 23. By the time we closed it, my birthday passed, I was 24. My house was $106,000 in Verona, Pennsylvania. So really reasonable, cheap house, tiny, 1,100 square feet, like super small, cute house. And we did it through, well, I say we, because it was me and Alex, but when we were buying this, we were just dating. So I bought the house in my name, even though obviously it was our house by the end of it. And in terms of shared responsibility, but for the legality side and for the purchasing side, I was by myself in that. So I went through an FHA loan process. So it was a first time home buying loan, which has a little bit easier kind of, what's the term that I'm looking for? They make it easier.
Like an easier process. Yeah.
Yeah. Like they do. There's some seller assistance where the purchaser, the buyer of the home that's an FHA loan doesn't have to bring as much cash to close. The sellers assist with the cash to close. So sometimes it's negotiated in the sale price of how much that goes up or down because the sellers bring some cash to close to assist with the buyer. And that's a wonderful option if you're a first-time home buyer. If you're self-employed, you can do the same thing. Anybody can get, or a lot of people can get an FHA loan. I won't say everyone because there are requirements to it. So when you are buying a home through FHA, there's some like different requirements, like I said, and you just need to make sure you do some research on what those are and if it's applicable to you. Same with the VA loan. If you were a veteran, it's, a similar, different, but, process in that there are different steps to take. So for this time, and I believe my income at that point was about $50,000 was my income a year. W-2 income. I wasn't making any money anywhere else. It was just flat W-2. I had no other stuff. I had no debt. I didn't have anything, like other than that. It was very clean, easy process of like pre-approval. I think I was only pre-approved for like $130,000 though. I mean, it's closer to the 2008. It's harder to get pre-approved for higher amounts now. They're very strict on how much you can be approved for different reasons. So I knew my limit was low. I only needed $7,000 to close on that house. And my mortgage on that house was $820 a month. So It was a dream. It was the best price situation. It was great. So I think there's a big misconception that you need to save a ton of money to buy a house. If you do FHA, you don't need a lot to put down. You do not need to put 20% down on a house. That is something that I will make a sort of stereotypical claim here that is the Dave Ramsey people that will say you have to put 20% down on a house to buy it. If you don't put 20% down, you just have to pay PMI, which is their mortgage insurance. I paid it on the last house. We're paying it. Not a big deal.
Yeah. When I bought my first house, I was like in my 20s. I had my first teaching job. I was making 50,000 some. My dad helped me buy it. My dad might as well have a Dave Ramsey tattoo. And the only thing I ever heard was like PMI, PMI, PMI. And like I had this irrational fear of like this PMI.
Yeah. Yeah.
I still have like secondary sweats when I hear you say it.
Yep. I mean, people are really like, you need 20% down. Like you do not need. I've been 23 years old. I think I actually had saved $20,000, which was still not even quite 20%. But what was lovely is I didn't put 20% down. I only put $7,000 down, and then I had cash for things in the house. I could go in and then not be house poor by having no cash and then needing to use debt
rooms,
couch, Right. So I could be a little bit more reasonable and pay a way lower interest rate on the value of the house and the PMI than if I were to use credit card debt to finance the couch and the, rugs and things like that. So just things to consider. You do not need to have 20% down. If you do have 20% down, you don't have to pay PMI, which is a small mortgage insurance based on the size of the mortgage you're taking out. So fast forward to this year, we found like our dream property. It was a foreclosure, which is a whole kind of different bear. But Alex and I are both self-employed now. Neither one of us work for other people. We're both W-2 employees now of Know Your Worth. We are an S Corp. We get a W-2. We pay payroll taxes, but it's our own business and the lenders know that. It is the same. They basically treat you like you are a single member LLC anyway, because they know that you have the power to change your paycheck. If you want to change your paycheck, you could up your pay for a certain number of months and just to show a pay stub that's higher and it not actually be that. So they're aware of all of it. So one of the biggest things that I learned from this, and not that we were doing anything, but that I want to tell other people, is they will ask you every question and they do not care how suave you are at explaining it. Mm-hmm. They will say cut and dry, no or yes, whether or not they are right. Like you will not sugarcoat something to a mortgage lender. So you can't say, oh, I have this business and this business is over here, or we were closing the Maverick. So we knew, hey, this payment for rent is going away. Doesn't matter. Wasn't our income before? They won't add it in. So they won't take anything into consideration that's not truly set in stone and that really you can't prove that's been set in stone for more than like a year. It's pretty hard to prove it hasn't been more than a year at least. So for the single member LLC to the S Corp, they don't understand that your payroll was in equity and now your payroll is in the profit and loss statement. So to them, it looked like our business had done worse from the first year to the next year. And that wasn't true at all. It had done significantly better, but it's just a matter of where my payroll shows up. And then also we hired Alex. So going forward, given it all worked out, so I wouldn't recommend to anybody to not go after your dream house or property if you just made the switch, but no, it's going to be a little bit harder. It's going to be a little bit harder.
You're going to have to document and show and
exactly. And with that, so you need to have at least 2 years of your personal and your business tax returns. You need to have your profit and loss statements, but at the same time, they really don't care because they think you can change them. Like they don't care what your internal profit and loss statements look like at all. They want you to have them to show that you're like a trustworthy person, I think. You know, it's just like a box of like, they were able to provide them. So we can rely more on like their tax returns, but they don't care at all. This year we're doing really well. Do you want to see my profit and loss statement? No. Filed tax return, official document, and that was it. That was really different. And then they wanted to see every bank statement from every bank account that we had personally and with the businesses. So
oh my God, my anxiety.
It was a lot. So it was like a full-time job for a little bit of like whenever they were asking questions and we had to get back to them quickly so that they could review it. It was a lot. So just have your ducks in a row whenever you're going
Just
to do that.
maybe like tell yourself it's going to be a marathon, not a sprint.
Yeah. Yeah, definitely. Yeah. And the biggest thing too that they really, because I kind of talked to our lender after so that I could try to give a little bit more advice to everybody else too. And one of the biggest things that they stress with business owners is your debt to income ratio. So if your business is doing well, but you're carrying a lot of debt, whether it's with your business or with your personal, it really doesn't matter. If you owe a debt to someone else, it counts immediately against you. It does not matter at all. Like immediately.
I'll never own a house again.
That's not true. That's not true at all. You just need to know what your debt to income ratio is and take that into consideration when you're looking. That's all. And sometimes they want you to pay off the debt first. But that's annoying. Isn't your down payment. And it's just something that I think would have been nice to know before so that I could have mentally prepared for some of the conversations. Like Alex and I had a credit card balance that they were like, pay it off right now. And we were like, but we were going to use, like, we wanted to save until we knew what the down payment was. Like, we didn't want to pay off, like, and get rid of the cash. And they were like, pay it off right now. And then it shows that you don't have basically a $500 a month bill. So we said, okay, pay it off, or a $300 a month bill or whatever it is.
Sure.
And just pay it right off. So we paid it right off and they were like, oh, now you're approved. And we're like, oh, okay. So,
wow. And
how much do we have to put down? And they were like, you pick what you want to put down. And we're like, oh, okay, well, all right, sounds good then. So then we did 10% down on this house. Okay. So we were going to do like 15 or 20. And then we just decided to pay off that debt and put down like 10%. So it's different, it's a different process. It's a little bit stickier. So I would definitely go through the pre-approval process first before you start looking, because a lot of these questions come up in the pre-approval process. So if you're interested, just go through the pre-approval process. They will run your credit, but they won't do a hard pull on your credit most likely until you say you're moving forward with the offer. Okay. So if you're interested and you want to get pre-approved, they can do a soft pull on your credit to see what your credit is, put kind of the offer together of what you'd get pre-approved for. They want to do a hard pull on the credit because it gives them more information. It's a more solidified number for them, but you can ask them to only do a soft pull and then kind of see if it will work for you, and then do the hard pull when you decide you want to move forward with the offer.
Does the hard pull hurt your credit score? Is that right?
Yes.
Why? Yeah. And what arbitrary land does asking what your own grade is hurt you?
Yep.
Like, doesn't that feel like we're in like a weird simulation? Like, that doesn't even make sense.
No, it doesn't at all. It does not.
Like, I want to know something about myself. Yeah. Yep. But now I'm in trouble because I asked.
Yep. I don't understand why a hard pull on your credit should hurt you at all. I think that if you decide to then move forward with the offer of whatever you're doing, you want to buy the car and there's the pull on your credit. It's just looking to see if you can afford it. Like, I agree. I think credit, I honestly think credit is one of like the dumbest things out there.
Taxes, it really just,
yeah. And your credit is annoying that your credit's like so out of your control sometimes too.
Yeah. I remember so I bought my house by myself and then we moved to Virginia and we built a townhouse together as a couple. And my husband worked for a company, but he was self-employed as a contractor. So he made over $100,000, but he had a sketchy ass accountant who made it look like he made nothing. Well, we didn't know anything because I had always been working for the school district. So I didn't know shit about being a contractor. He had always had jobs through corporations. So we went to like do this whole process and they were like, you don't have the money to do this. And we were like, yes, we do. Look at our accounts. Like, we had so much money. Yeah. They were like, no, you don't actually. So it was like a really hard lesson to learn. It set us back like a year because we did have to change all that stuff and, report it differently. But we were, we just didn't know. We didn't know what we didn't know.
Yep. The government will get its money. So it's like one of those things where if you want to report really little income, and that's what a lot of people want to do, that's what I want to do. I don't want to pay taxes if I don't have to. And so, but if you are not reporting your income or you're trying to get out of reporting your income to pay taxes, you're making it harder on yourself if you want to
Progress
buy
your life.
investments or things that are kind of like borderline, not borderline, but like, you know what you can afford. And so if you're looking at like your house or your car that are at like, oh, I know I can afford this. Well, if a bank doesn't know you can afford it and your tax return doesn't say you can afford it, you won't get it unless you can pay for it in cash. Like,
right.
Cash is king. That's for sure too. I mean, if you can pay for your whole house or car in cash, do it. That's great. You know, there go back. Dave Ramsey's right in that. Paper and cash. But if you're somebody that can't pay for your whole house or your whole car in cash, you need to think about how you're setting yourself up and how you look to a lender or to a bank.
Wow.
That's a big part of the process.
Yeah. Were there any other like hidden fees or pitfalls or anything that you guys like stumbled on and you were like, oh, well, that sucks?
Not like pitfalls, but the whole thing was such a process because it really felt like we were like being like scoped at for like money laundering. Like that's what it felt. And like, so we have 3 businesses and our personal accounts, you know? So we and Alex and I each have separate bank accounts. We have a joint bank account and we have separate credit cards. We have all separate things too. And we have a joint account for all of our bills. But then we have business checking and saving, business checking and saving, business checking and saving. So we have so many accounts and we keep really good records of all of them. And that's the takeaway for me is that I'm really glad that we do have good records of things. So one of the fun things that happened for this process was we put in the closing check. We sent a check to the closing company for the hand money. No, so not for the closing check, sorry, for the hand money, just at the beginning of the process. And I got a call from our real estate agent like 2 days before we left for Germany that said the closing company accidentally shredded your hand money check. So they just lost it, never deposited it. Just like threw it in the shredder on accident. Yeah. So they said, you need to go to the bank right now. You need to do a stop payment on the check, the cashier's check, which is very hard to do because cashier's checks are certified for a reason. So then the bank, you're stealing money from them some sneaky way of like someone's going to deposit it overnight while the stop payment's in process. So you don't get the money back for 24 hours after the check is officially like stopped. So it's in limbo for like that 24 hours. You don't have it in your account. Well, then we were leaving for Germany. It was Labor Day or Memorial Day weekend. So the banks were closed. So we left for Germany and we didn't have this check. So the banks just holding onto it for us. So we had this $5,000 check just like in limbo. It wasn't in any of our accounts. It wasn't showing up anywhere. So we get back from Germany 3 weeks later. You know, we're there for like 17 days. We go to the bank and we deposit it. Well, then we're going through this process of the mortgage company checks all of the ins and outs, especially when you are self-employed, because they want to make sure that you're not receiving income from somewhere you shouldn't. It's part of like the terrorism act, anti-terrorism whole thing that goes on. I don't know the correct name for it, but they need to verify every dollar in and out of your account that is significant. So we had to go through and like initial and like describe every transaction in. So for golf lessons, we do for the, co-working space income, for the know your worth income, for a distribution we took to buy the house, every single dollar for like 6 months. That's ridiculous. Great. Yeah. It starts out with like 3 months or normally for most people, it's only like 2 months, 3 months. And then they were like, oh, well, we need more comfort over these. And then they were like, well, where's this $5,000? I'm like, this is what I explained to you before. It's a stop payment. And they were like, well, it's missing for like 3 weeks. So they basically thought we like sent it somewhere for like some bad activity. And then like, cause it's just disappeared.
And then you took like a suspect trip, like out of the country.
We left the country and then we brought it, came back into the account. Like, and it's like so minimal. You guys really do. I'm like, yeah, we're money laundering for, such a high dollar amount here for $5,000.
Right.
Down payment of I don't even know, $50,000, $40,000, whatever it was. And it just was like nuts. But so then we had to take our whole description. We had to email the bank that we were working with. They had to email back that they certified that it was real. But then the email didn't count. So we had to take it down to the waterfront bank because that's where I was at that day. And if you're from Pittsburgh, then you had to cross like 2 rivers to get there. And it was just a process. So thankfully, the documentation, so this is why proper bookkeeping is really ideal.
Yeah, let's just throw that out there. Here's the plug.
Yeah.
Yeah. That sounded like the Oregon Trail. You were like, I had to cross 2 rivers to get there.
In my covered wagon.
Did you get dysentery?
Yeah.
Oh, well, you know what? I'm super glad that it worked out and you're in your house, but man, I bet you needed a drink.
Yeah, a few. Yeah, it was a process. It was a process. But buying a house as a self-employed person is definitely harder than if you have W-2 income. Just know that. So you need to make sure that you have clear records and that you are comfortable with the income that you're reporting so that you can show you make money to buy the stuff that you want to buy. So everybody wants to reduce their income as much as possible. But if you want to get lending for a loan for the business or a line of credit, if you want to buy a house, if you want to buy a car, you want to buy an investment property, and you've been really skimming your income to show that you don't make a lot of money, you're not always doing yourself a favor if you're hurting yourself from getting some of those opportunities.
Right. So plan ahead for the opportunities if you can.
Yep. Exactly. Yeah. And meals and entertainment's another like kind of funny one that it was, and I should probably clarify on this one just to make sure I'm saying it the right way. But they added back in all of the meals and entertainment that the business had as income to myself. So that was one of the things that was interesting because on your tax return, like not all meals and entertainment are deductible for your business. It's 50% meals and entertainment. Well, when you're buying the house, all of it is added back as income for purchasing a house. So they want, that doesn't mean to do that, but it just means, again, like a lot of people will put meals and entertainment, they'll go on coffee dates with their friends and say it's a business expense and it's meals and entertainment. And that's only 50% deductible for taxes. So it's not always the best thing to do. But when you were buying a house, they did add it back in as income for us. So that was interesting. Just something I didn't know would happen.
Yeah. How did that affect you guys?
I mean, we've gotten pretty streamlined with that number for the business in the past 2 years. I think I was probably one of those people in the first year, like I wanted to go on business meetings, and given a lot of my friends are clients, so we did talk about business all the time.
Right.
But I was definitely somebody I think in the beginning that was like, oh, this is a business expense, and it was, but it doesn't need to be all the time anymore. We can not call everything, it needs to truly be that business expense that we feel comfortable validating and supporting. Writing down who we're with and having that be a true business expense. So the past 2 years were pretty streamlined. So, it was what it was at that point. But rent was the biggest part that was kind of annoying. But that was because it was another business we owned. So that was part that was like, oh, well, this is going to be income to us because we're closing this business. So this whole line item we get to keep now. And they were like, no, doesn't matter. Doesn't matter.
Yeah. 2 years ago, it would have mattered, but now it doesn't.
Yep.
So my takeaways are prepare yourself for lots of documentation and justification, get a bookkeeper and get your ducks in a row and be patient.
And I think get pre-approved now, like figure out what you can afford and just, start to look from there. And if it's not what you want, then just put your head down and put your books in order until you get to that point too. Start goal setting for how can you set yourself up, not just with income, but set yourself up on the books to buy a house. Yeah.
Well, thanks, Sid. Thanks for sharing your Oregon Trail journey with us.
And we did really end up in the middle of nowhere a little bit here too. So
you did.
Good
you could homestead on that property easily.
Walk away.
All right, buddy. Well, thanks a lot. And then next week, I think we're back with just us again. And then have some more guests on our way.
Sounds great. Yeah. Thank you all for listening. And thanks for letting me talk your ear off for about 25 minutes.
I love it. It's my favorite.
All right, everybody, have a great day and enjoy your week. If you found a bit of inspiration in this episode for achieving your sexy money goals, click the subscribe button on your favorite podcast app or YouTube so that you never miss an episode.